Hey traders, welcome to Charts and Coffee. Great to see everyone. Happy Friday. Happy non-farm payroll Friday at that. We just wrapped up sort of a fast and furious session in the Sector Secrets Mastery where we uh, we looked at the non-farm payroll reaction with the hourly price movement ranges and set up what I like to endearingly call a catch the wick, which is to say, in the moments preceding non farm, and my Sector Secrets Mastery folks, you can catch this replay probably just a little bit later on this morning when it gets posted in the Mastery archives. You can watch what we were doing the 10 minutes before the release and then ultimately what we did upon getting this wick. The initial this isn't about, what happens in the 10 to 12 minutes after NFP. This reaction is all about what does 8:30 tell us about, what we can do. And the first opportunity we had was an hourly price movement range red zone short. Now, if you catch my free videos from time to time at the Simpler Trading YouTube channel, you should be pretty familiar with that lingo, that jargon. And that's exactly what we had, a quick move to the downside, and that's it. And that's pretty much all that I'll do with NFP. Um, in the meantime, just a reminder, I will not be actively trading the morning of non-farm. For me, the best opportunity, especially with PCE, non-farm payroll, CPI, some of the best opportunities come right with the hot zone. But that does make it a futures or even Forex only trading opportunity. It's really not going to be stocks, stock options, ETF options. It's really futures, not even futures options because it's so fast. It's going to be futures or Forex. And while I know not everyone is necessarily a futures trader, if you're already an options trader, it's not a difficult adjustment at all. It is, you got to know the contract, just like in options. Got to know volatility, just like in options. You got to know your zones, just like in options. It's just a little bit different in terms of leverage, a lot of bit different because of the higher leverage. But there are micros, and those are absolutely accessible. Micros for the euro, micros for the S&P, the Nasdaq, Dow. So there are some very tradable lower risk contracts because they're smaller contract size that we can look at if this is a kind of trade you want to pursue, these pre-market futures trades. All right. So with that being said, what else do we have going on today? For me, very little, very little. And that means that I'm okay a few times a month, mostly non-farm payroll Friday and options expiration Friday, saying, you know what? I'm going to go have a long lunch with my husband today. Or I'm going to, take my mom out. Or I'm going to just do anything but trade on a day like today because it is trickier, right? Because so much of the opinion was expressed earlier this morning. The initial reaction that we took advantage of, gang, was a high short from that level. And then, even though we're up, the profit was taken on a short. Interestingly enough, in the 10 to 12 minutes after NFP, where the market participants can get a feel for that giant report and all its moving parts and pieces, now seems indices are up, bond yields are down, and we seem to be right back to risk appetite, where this morning that was not the view. In fact, we were trading below the previous session close on most of the indices, hence my preference to take that quick wick short on the NFP reaction. Okay, so again, my non-farm payroll traders, it's a futures thing, but I love that so many of our simpler traders, our simpler community is getting more and more fluent in futures. Fantastic. All right, so let's get to it. As always, your questions are the best part of the show. And first come, first serve. Let's start it off with Jack. May I ask my thoughts on the indices' reaction to the reports this morning? I thought the good news report would push the indices lower, not higher. I'll tell you what, Jack. Yeah, we were talking about that as well. But I guess the question was it really just good news? Remember, there's uh, three moving parts, three main parts to NFP. nowadays. It's never just the headline number. It's the average hourly earnings, which is really more of an inflation conversation, and it's the unemployment rate, right? I have to say, average hourly earnings were disappointing. The inflation there is not that what we would want. The non-farm itself, it wasn't great, and here's why, Jack. Sure, we beat expectations by 23,000 jobs, but take a look. The previous release was revised lower. That kind of creates an offset, right? So I can't look at that number and say, "Wow, that was really strong," because if you notice, the revision was revised down a little bit. So that kind of takes away a little bit of the good news of the headline non-farm change number. And then the unemployment rate, the previous ticked down from 3.7. We came in at 3.5. We expected 3.7. So it's kind of a sloppy trio of numbers. And remember, notice the initial reaction to your point, right? To your point, Jack, the initial reaction, the reaction we took advantage of in the mastery was, to your point, the short side, was that weakness. It didn't last long. And this is what I tell my members. Non-farm is two reactions. One is quickly digesting what those three numbers mean. We do that in a second. That's that first reaction in the first 1 to 3 minutes or so. But after that, non-farm is a massive amount of data, sector breakdown, seasonal tendencies, et cetera, et cetera. 5 to 10 minutes after today's report, we started to see, after the initial headline reaction, the market started moving higher on the indices, lower on the yields. So that took a little bit of time. And you'll see non-farm is often sort of this two-part reaction. And that's the way that I look at it. All right. Thanks for the question, Jack. Next up, Tim asks, does the V-score work with longer intraday time frames, such as the 1 hour and the 4 hour? Absolutely. Volume works on any time frame, Tim. Absolutely. And again, all we're doing now is changing the way in which I'm studying the nature of the VWAP and the standard deviation of it on a 1 hour, 4 hour, daily, weekly, or a 5. I use them on everything because it's just understanding what volume is communicating about that time interval. So absolutely, yes, you got it. All right, from our free trading room, Ann asks, gold and XHB. Sure, let's go take a look what we've got here. First up is gold. We'll take a look at GC. I want to buy a dip here. And I absolutely want to buy a dip. I just really haven't had much of a chance to. I would like to buy a dip, and that dip's got to come minimally around 1833 and a half. And that would be a daily price movement range level, not even the wave, not even a reversion to the wave. The next is XHB. I can't say that I love XHB. It's not a trending market, although I would be more bullish than bearish. And I would say if you're going to look at XHB, get that Darvis 2.0 on your screen or on your charts if you don't have it already. There's just no better way to automate support and resistance on a chart. And Darvis 2.0 is free, so can't beat the price. And it's really probably a matter of getting down to that level, as we did already once here. Take a look. That's what we're looking for again. So we probably already had that opportunity right here in this window. And we would just wait for that to happen again, right? Because it's already moved away from that. That was our bus stop, right? That was the bus stop. And since we moved away from the bus stop, can't chase, right? I don't want to trade like a Jack Russell Terrier tearing after the school bus. All right. We don't chase. We never chase, right? We don't chase. And I think it's so tempting sometimes to chase because we think, the FOMO. But yeah, as long as we know our bus stop, we're always going to be good. So that is XHB. Thank you for the question. All right. Next up is bullish or bearish in the morning session. Glenn, I'm not going to be trading the morning, as I mentioned, but am I bullish or bearish based on what we see now and coming up off the green zone of the HPMR, trading now above the previous session close? It's hard not to say I'm more bullish. I also look at the structure of the 5 minute that went green 5 minutes before 9. So I've got a green trend now on that 5 minute time frame. So based on what I see, based on my indicators that are gauging market structure, got to be bullish, right? For as long as that structure holds. All right, next up is Praveen asks, can I use the hourly setup on decoding volume setup? Um, can I use the hourly setup? Praveen, I'm not sure what you're asking. Can I use the hourly? You mean the hourly PMR? Praveen, I don't quite follow, but I'll look for a follow up on that. Use an hourly setup. You mean a 1 hour chart? If you mean a 1 hour chart, oh, absolutely. I may not do a lot of 1 hour or 4 hour trading. I used to do a lot of it in my Forex trading days. And I'm going to be bringing back a lot more of that. If you haven't checked out, gang, if you haven't checked out the free video from last night, especially to your question about the hourly chart, which I think is what you're asking, Praveen, cool. Check out the video from last night. And I go through a lot of detail about how that time frame, the hourly or even the 4 hour, is one of the ways we will adapt to the reality of difficult follow through on the daily time frame in 2023. I think you're going to like that video a lot, Praveen. Check that out. And then if you have more questions, let me know. All right. Next up is I mentioned that one should time the euro swing trade with non-farm. Oh, you can. Not that you should. You can. Aston, yeah, the non-farm is going to affect indices, currencies, and treasuries in an intense way. So if we were looking at the daily time frame on the 6E, which is what I was talking about earlier this week, yeah, if you want to use the non-farm payroll release as a way to trigger a 6E trade because we know there's going to be an intense amount of volatility, or if we don't want to sit through the volatility and instead enter after the volatility, that's why I mentioned that. Because if we are pre-positioned in front of something as intense as non-farm, we're going to tolerate that movement. But if we use the volatility to enter the trade, then we get to, use that low or high to our advantage. It's a little bit more exhaustive in my experience. So that's what I mean by that, using the volatility rather than having to withstand it. All right. Okay. Next up, let's see here. Hang on, gang. From the free trading room, let's see. How did I manage that futures trade this morning, given it moved 50 handles in 1 second? So, Aaron, what we did in the mastery is what's really important is, Aaron, the zones that we see. So we started the session at 8:20 Eastern, so 10 minutes in front of the report. 10 minutes in front of the report, the hourly price movement ranges are still moving according to the volatility that we're seeing pre non-farm payroll and respecting historical volatility for that time of day. And therefore, they hadn't gone berserk yet because volatility hadn't caused the HPMRs to recalibrate to what we have at the release. Really important distinction because I cannot trade HPMRs at 8:30 in 1 second. It's too late. Non-farm has already changed the complexion of that, the support and resistance. That's why we set the trades up using limit orders. In fact, this morning, what we did is we bracketed, which is to say, I don't use OCOs or if thens. Bracketing simply means that I know where my red zone is, and those red zones are limit orders to sell. I know where my green zone is, and those are limit orders to buy. And then whichever gets hit first, the other one ends up being one of the profit targets. And therefore, if I don't have that limit order in, that price conditional order already in, I don't believe in market orders. I kind of personally wish they didn't exist. It's a terrible way to attempt to enter the market. At the market is meaningless, right? Because especially on non-farm, it can mean anywhere from here to Pluto in terms of a fill, right? So we put those limit orders there, communicating to our platform, either give us this price or better, or we're not getting in. So it's got to be a conditional order. And that's something that I teach a lot of, always having a price condition, a trigger, right? What is a trigger? It's a price condition. And letting that conditional order, that price conditional order, stop order, or a limit order be the way that we enter and exit the market. Never ever market. If I'm using a market order, I screwed up somewhere, right? And so that's how we take advantage of something like that. So I appreciate the question there from the free trading room. All right. Hang on, gang. Let me catch up with some of these questions here. Bear with me. What is the green, yellow, red ribbon on my chart? Green, yellow, red. I have the wave on my screen. That's a 34 EMA on the high, the close, and low. That's the green, red, blue. I guess you're talking about the HPMRs and the DPMRs, Colin. So those are price movement range tools. It's a process I created well over a decade ago now. And it looks at historical volatility to place time and volatility based support and resistance on a chart. So it's quite unique. It's something that we do here at Simpler. And it's something that I created actually back from my Forex trading days using data that allowed me to see how many points a specific market moves depending on the time of day. Oh, hang on, gang. I've got some noise coming in here from somewhere. All right, there we go. So the idea here is what number of points do we typically see depending upon the time of day for that symbol? And that's what that does. Right? Okay, next up, let's see. Nice video. Hey there, Karthik. Nice video last night for hourly setups. What is the expiration I would use? Still 40? No. So Karthik, no. So great question. If I'm going to swing trade, and this goes back to that video that I alluded to earlier, it's called Adapting Strategies to 2023, right? I'm not changing strategies. We're adapting by looking at different time frames, different slices of psychology. And the expiration would be shorter. I don't need as much time, Karthik. So just as a general rule, it can be under 30 days. I don't like anything less than 14, but it can be in that 14 to 21 window. Just remember, when we start getting less than 21, less than 14 days to expiration, unless momentum and trend are strongly in our favor, the time decay really starts to look. Time decay is not steady. Time decay is exponential. So I have to keep that in mind. If I'm under 14 to 21 days, I better darn well be at or slightly in the money with the option, and I better have that trend and or momentum in my favor. And so we can be under 30. We can be under 30 for those 1 hour setups. Great question. Great question. All right, next up, and how am I on time? Oh, almost out of time. All right, next up is, hang on, okay, let me grab another question here. I see something on Tesla. All right. Question here about Tesla. Do I see a Tesla temporary bounce to 130 that was in range last week, or a drop further? Okay, so depends on the time frame, right? True is. Let's look at the daily. I don't know what time frame you're looking at, but I'll just go with the daily here. Here's Tesla with the daily price movement ranges. And what I can do is just ask myself, what is the range on that daily price movement range? The upper end is 120 and a half roughly. The lower end is 98, 70, 98 and a half. Okay. The question then is, do I see a temporary bounce? I'm never going to be able to predict what a market's going to do in terms of a bounce. So I don't know, right? That's a little bit more in the prediction side of things. If, however, to your point, if we get down to this area, I would look for from there, right? Remember, it's never about, can I predict where a market is going to go? It's always about, what will I do when it gets there, right? True is. So there are the two zones I would look for, and I would look for exhaustion there, and I would look for a bounce there. But my overall direction and opinion of this market, based on the structure, is lower lows. It's lower lows. Stacy, thank you as always. Yeah, smash that like button. As always, thanks for being a part of the Caffeinate and Dominate crew here. Charts and Coffee signing off. All right, gang, be good to each other. I'll see you Sunday for the Raghee Report.